Hey guys, thanks for joining me. Appreciate it. Well, the end of the month is here. May is upon us tomorrow, and the stock market kind of finished really the same way things have been going the past few weeks. Pretty much all green. With Dow Jones was up 21 points. NASDAQ, which is getting a big boost from Microsoft and Apple, finally up 22 on the day, 33.28 on the NASDAQ. Mid-caps were the strongest of the bunch. Russell 2000 and the S&P 500 was up 4 points. And treasuries are hanging in there, and we'll talk about that in just a minute. And this isn't going to be a terribly long podcast, but did want to get something out to you, just giving you an update on the market, because right now we are sitting pretty close to, if not at, all-time highs. And as it does this, it's very interesting what's kind of happening underneath the surface. The last few, I would say, couple of weeks, perhaps even 3 to 4 weeks, as we've been we were moving sideways. We had a little bit of volatility in the middle of the month, and the market had kind of recovered and now finished at this high. But even though we're at these high prices, I'm starting to see some short-term concerns. And again, as we always talk about, you have to break this down into time frames. And I still don't see any evidence longer term, meaning the next few months, that a bear market is imminent. However, in the short term, let's go through some of the things that we are seeing. What we're seeing is the demand for stock starting to wane a little bit. Now, there's not a big intensity of sellers. Obviously, there's not. Otherwise, the stock market would be falling and not rising. But just because it's going up as it has the past few sessions, it does not mean that there's all green lights and it's gung-ho. What you see is the stock market rising, and it's really a function of simply nobody really wanting to sell. But we are seeing the buyers somewhat take a break and say, okay, maybe enough's enough. I'm going to hold off and see if I can buy some things at lower prices. And while that may be bearish in the short term, it's actually bullish in the long term. But in the short term, what we're seeing is we had been seeing things like, utilities and healthcare performing very well. And, I was complaining about that, saying, well, the market shouldn't be going up because those are leading the way. And I simply said, own them. We've owned utilities and healthcare for a few months now and have done extremely well on those, and they continue to rise. But what you're seeing is as the market's going up, look what's happening with treasuries. TLT, which is the treasury ETF that most people buy if they want to go long treasuries, in other words, they believe interest rates will be falling, it hasn't been falling the last few days while the stock market's rising. These things have tended to be moving opposite in the last few years as a flight to safety. And what you're seeing now is the market is moving up, the stock market, and yet the bond market is not going down. So what that tells me is that there's not a rotation going on from bonds to stocks. It may be new money coming into the stock market, and that's bullish because people aren't selling their bonds. They're just simply taking cash and investing in the stock market. But we do have to look at the fact that volatility in the markets have picked up in the last few weeks, and yet treasuries have been kind of a steady eddy the last few weeks, and that's a little concerning from a short-term perspective. So what I'm seeing when I kind of analyze the market is I'm seeing some of these safer things, some of these things that would tend to do well if the stock market were to fall. Those are starting to kind of show some strength, and meanwhile you're seeing some of these things that had been leading the way are starting to wane a little bit, and we're starting to see volatility pick up. So it's just a warning sign. That doesn't necessarily mean go out and sell everything. It's just I am noticing a little change in character, just a subtle little change. And so we went in actually today and sold small caps, which had been doing very well. And, small caps, if you look at the Russell 2000 here, again, they're at a place right now where they still are lower than they were back in March, about a month, a little over a month and a half ago. And so they're kind of struggling here recently. And so that's been a concern in the short term. But they did finish the month with a bang. I think they were up. They did pretty well this month overall, but not as strong as obviously some other areas. Just as plain old S&P 500, I think, was up over 3% for the month. And so those are some short-term concerns that I'm seeing. And again, we need to be careful here. I don't think this is a market you necessarily short, but I do think it's one where if you have something kind of going parabolic, or you're worried about something, go ahead and take profits. Or even if you have something at a loss, go ahead and sell it at a loss, because I think you can buy it back cheaper potentially. Now, the big risk there is that market doesn't do anything. It just meanders sideways and then goes on up to a higher level. But I think the fact that we do have the calendar changing, we do have a new month tomorrow, perhaps we see Wall Street try to lock in some gains, and we see some type of short-term rotation. And obviously, you're going to hear a lot about sell in May and go away. And look, some years it works, some years it doesn't. I don't think anybody should use the calendar as a strategy, because, again, there have been plenty of months that were supposed to do very well and they didn't, and vice versa. So, look, I'm just telling you, after the market has had the run it has, it wouldn't surprise me to see the market pull back, but the fact that it's May doesn't influence my decision on that. So be careful in here. I think overall, just keep a balanced approach. I think obviously people that were ultra bullish in gold the last several months have realized that there is no holy grail in this market. There's no silver bullet. You have to have this balanced approach. For those people that were burying gold in their backyard thinking that it was the greatest and best thing ever, they've seen a tremendous decline. And yes, gold is bouncing, but that does not necessarily mean that it's done going down. I think, in fact, if you look at GLD here, I think it could bounce up to the 150 mark and then roll back over. That was the old breakdown level. It could roll back over at that point, so that may be even time to go short gold. Why is this happening? Nobody's really worried. The economy is given some mixed results, but it's mediocre at best, right? It's mediocre, but we are seeing signs of deflation, if anything. Definitely a slowing of inflation, but potentially deflation. And we don't really want deflation, because deflation means that people are going to defer purchases and things of that nature, but we do want this moderate inflation. Now, all of you have been worried about raging inflation going forward when we look out the next few years, but we're not seeing any signs of it now. Yes, it will be a problem at some point, but look at the commodity market. Look at all the materials. Look at gold. They're not signaling inflation, and so. But the bottom line is, you have to remain, spread out in this market and diversified. Do not give up on your income-producing assets. I know a lot of people that feel like, well, the stock market's doing well. I don't need that income stuff, quote unquote. Well, you do need it, and I think overall you'll be happy you have it when the market does have some type of severe correction. Not a 2 or 3 day correction, but a 2 or 3 month correction, which is inevitable at some point. So keep a balanced approach, some income, yes, some precious metals, some real estate, some stocks. And I'm not saying have this nice pie graph all the time, but certainly weight towards certain areas. But I think overall you have to own pieces of these things, because if you're somebody that owns a bunch of gold, you probably have had some pretty sleepless nights. On the flip side, if you own all stocks, you're out there bragging right now, but there's going to be a time that comes, that causes you some sleepless nights as well. So just take a balanced approach. But I am seeing the risk change a little bit. I did want to update you on a couple of things real quick, a couple of reasons why the NASDAQ keeps going up. One is Microsoft. Now, I've owned Microsoft for a while and been very bullish. I've been on Twitter talking about it, and I had some people commenting that it's the worst company ever and this, that, and the other. And I just laughed and continued to own it. And you're starting to finally see this pop. Now, this is a long-term picture from 2008 or so, and you can see it's pushing up against some of these resistance lines. But in the short term here, it has moved up dramatically from the low, I guess, mid-20s up to 33. And now you're starting to see signs of companies like Apple redoing their operating system, and some say they're going to mimic what Microsoft is doing with some of their tablets and some of their phones and so forth. So it is interesting to see the tables turn. But look, the reason I own Microsoft a couple of months ago is the same reason I own it today. It's a value. It's cheap. I'm not saying they're the best company. I'm not saying they're doing the most innovative things, but I do like the fact of when you look across everything that they're doing, all their businesses, and they said that the Xbox was going to come out earlier than anticipated, which gave the stock a boost. The stock was downgraded by an analyst, and then it continued higher. But look, it's just a value based on how much cash this company is generating. A ton of free cash. They have more money than they know what to do with at the end of every month, every quarter. And I know for a fact big institutions love that. And so they're attracted to it. And when you look around the landscape right now and you see a market that is a 4-year-old bull market, and investors are going to start looking for bargains. And I think Microsoft is still a bargain. Yes, it's had a big move. I don't know if I'd buy it today, but on any pullback, I would still buy it. It has not reached full value, in my opinion. The other one that has helped out the NASDAQ lately is Apple. Remember, Apple came out with their earnings a week or so ago. It's all the talk. The stock gapped up about 5%. Then, of course, it reversed course, went down that evening after hours, and only to see it start working its way higher. And here it is sitting at $443. The downtrend looks like it may have broken. I don't think that this is necessarily, I think there may be lower prices ahead that you could buy Apple. I think if it kind of comes back to this lower area and makes a inverted head and shoulders potentially, which this price level here is about $415, let's call it, that, and then it turns around and heads back up, that may be a really long-term buy. But here's what's going on with Apple. They issued some debt today. They issued about $17 billion of debt. Now, this is really silly, right? Because from the surface, you're going, wait a second. I thought they had $145 billion of cash. What on earth are they doing going out and borrowing money, right? That's like somebody that's got a $10 million in cash in the bank, and they're going out borrowing money to go buy a $20,000 car. You're going, that doesn't make any sense. Why would they do this? Well, a lot of Apple's cash is offshore, some island, right? And they got tax breaks over there. And if they bring it back in the country, they will pay enormous taxes on that money. And so what do? They say, hey, you know what? We're being pressured by Wall Street to give a lot of our cash back to investors through buybacks, through dividends. We're going to do that, but we don't want to pay taxes on that cash, bringing it back in the country only to give it out to shareholders. They pay taxes. It's not real efficient. So what we're going to do is we're going to go ahead and go out in the open market and borrow the money. And they basically had a bunch of different types of bonds. Their 10-year bonds, for example, they're paying about 2.5% on. So they're paying 2.45% to borrow money for 10 years from the open market, and then they can use that to pay you their dividend and do stock buybacks. So it makes sense for them to do this because they're only paying 2.5% for this 10-year money, which is a lot cheaper than bringing back that cash from offshore. However, the fact that they were pressured into doing this with their cash, to me, is still silly. I mean, let's just look at this on the surface here. They have $145 billion of cash, and Wall Street saying, we want you to do something with it, do something with it. And in fact, we want you to take on some debt because that would be shareholder friendly. And so they're borrowing money to do stock buybacks and pay you a dividend. Yes, it makes sense, but it's really silly that they acquiesce to this pressure. I would have rather seen them, yes, I like the stock buyback part, but again, make an acquisition. Let's do something to get the hot products back out on the market. That's really what's going on. You can only manufacture earnings growth for so long, and their earnings growth has slowed down. We've talked about that ad nauseum here on this podcast about how Apple has deteriorated somewhat over the last few quarters. Their margins have dropped, their revenue growth has dropped, earnings have dropped, but it's a great value at this price. I own it. I don't anticipate selling it. I'm not running in there buying it today, any more of it, but I do think it's a value, and so that's on this side. But on the other side, I want to see the sales ramp up again. I want to see that excitement around Apple that seems to be missing right now. There's talk that Tim Cook, the CEO that took over for Steve Jobs, may be on his way out the door. That's just rumors right now. But again, they need to show something here. That's, my part of the checklist, if you recall from a couple of months ago, as I said, for this stock to really bottom, they have to address the cash, but they also have to come out with some unique products and really get us amped up to that we have to have that product, whatever it is. And you've heard about a watch, you've heard about a TV, but until those come out and we just have to have them, the stock is going up because people that were short are now saying, maybe the worst is over, we're going to go and cover our shorts. That's a different crowd buying the stock. What we want is institutional buyers that have to own Apple. That's what made it go from $80 to $700 a share. But it's a good value at this price. If I didn't own any, would I buy it at 442? Absolutely. Absolutely. It's a company that is still a dominant company generating tons and tons of cash. But for them to have to go out and borrow money, even at 2.5%, is silly when they have $145 billion offshore. Now, what's the problem? Well, this isn't an Apple problem. Apple is simply playing chess with the government. The government has these high taxes and on bringing that money back on shore. And because of that, that's a lot of tax revenue that the government is not getting, because a ton of companies are doing what Apple's doing. They're leaving all this money offshore instead of bringing it back here where it can go to work in the good old USA. It's not happening. And it's because of the rules, the regulation, and the taxes of how we have things set up here. There's no incentive for them to bring it back. So instead, they're forced to go out and borrow money when they have $150 billion in their back pocket. It's crazy. I've never seen anything like this before, but they're playing by the rules, and that's what they're doing. They're adjusting to the rules that they are given. And so anyways, but that's what's leading the NASDAQ up right now, is really Apple and Microsoft are really helping that, because, of course, they're heavily weighted in that index. All right, have a wonderful day, and thank you very much. Don't forget to check out all the websites, iTunes, podcasts on there. We've got karleggers.com, eggerscapital.com, Google+, Facebook, blah, blah, blah. Have a wonderful evening. We'll talk to you soon.